Hello, hello. My name is Erica Belay. I am a mortgage loan officer with Best Life Mortgage Corporation. If you are tuning in live, thank you so much for joining me. And if you're catching this on a rebroadcast or the recording later, I appreciate you tuning in. I'm streaming right now, I think, on Facebook, LinkedIn, and on YouTube. And um, tonight I am talking about Home Loans 101. So I typically do my live streams on Thursday, but I didn't do my live stream last week Thursday because I was in Michigan for a loan officer training, and so I decided to push it to Tuesday. So I'm doing two live streams this week. So tonight I'm talking about Home Loans 101. And on Thursday, I will be talking about the home buyer process for specifically for first time home buyers. So thank you so much for tuning in. Just a little bit about me. I work for a mortgage broker, Best Life Mortgage. I have access to about 20 different lenders with a lot of different loan programs, all different types of loan programs. So I'm going to touch on some of those tonight. I currently live in Kyle, Texas, and I do most of my business along the I-35 corridor from San Antonio and Austin. I grew up in New Braunfels, and so I love Central Texas. I love Texas, so I can do loans anywhere in the state of Texas. But most of my business is right here in Central Texas. I am a wife and a mom, and I was a teacher in my past life. I was a math teacher, and I am a real estate investor. So I love all things real estate and investing, and I really just want to help people get into homes. I think buying a home and buying rental properties, it's really like it's one of the best investments that you can make. And so I want to give my clients and my friends and my family just the tools to be able to do that, to help you get into your home or buy your investment property. So without further ado, I'm going to kind of jump into this. I've kind of designed this training more for realtors so that realtors know what's out there to be able to help their clients. But even if you're not a realtor, you just want to hear about some of the different loan programs. There's a lot of just different things I'm going to touch on. So this can be for really anybody who's interested in getting approved to buy a loan. Let me just change my view here so that there we go. So if realtors, it's really important that you know what different programs are at your client's disposal. And so a lot of realtors will have kind of like a niche market. Maybe you focus primarily with a bunch of self-employed borrowers. Maybe you focus a lot with first-time home buyers. Maybe you're in the jumbo loan realm where most of your buyers are jumbo loans. But even so, it's good to know what those different niche products are. Today, like I said, I'm going to go over a number of different loan programs. So by the end of this, my goal is that you just have a decent understanding of what's available for your clients, or if you are a home buyer, just what different options you have. So I'm going to jump into the most obvious one, the most common one. That's the conventional loan. Typically, that's the one that most buyers are gonna use. And it does meet a conventional loan meets the needs of a lot of different home buyers. You can put as little as 3% down for a conventional loan, so like 3 to 5% down. But anytime you put a down payment that is lower than 20%, you will have the extra monthly cost of mortgage insurance. Now, I do have one lender that has an MI buster, which means that you could only put 10% down and not have to pay mortgage insurance. But there is a cost for that. You usually have to put a little bit of like it's maybe a slightly higher interest rate or some different stuff that's built into the price of the loan. But there are all different kinds of conventional loan programs. You can use a conventional loan to purchase a primary residence, a secondary residence, an investment property. You can even use the potential income from an investment property to qualify you for a conventional loan. Um, the terms of a conventional loan can be anywhere from 10 to 30 years. Most common options are like a 15-year loan or a 30-year loan, but I have a lender that'll let you pick any number in between. If you want to do an 11-year loan, you can do an 11-year loan. If you want your loan to be 19 years, so you can kind of pick numbers in between, but the most common are 15-year or 30-year loans. The interest rate can be a fixed rate or it can be an adjustable rate. A couple weeks ago, I did a training on the ARM, the adjustable rate mortgage. Um, ARMs are kind of coming back right now because we are in a rising interest rate environment. So as the interest rate for a fixed interest rate, as those rates go up, sometimes an adjustable rate mortgage might be a good tool, because even with an adjustable rate mortgage, you can still lock it in for maybe like 5 years or 7 years, um, and then it becomes an adjustable rate. So anyway, there's lots of different kinds of conventional loans out there. Um, and so even though this is the most common type of loan, when would it possibly be more beneficial for your client to use a different type of financing, such as FHA, VA, USDA? So FHA, VA, and USDA are the other more common loan programs. So the VA loan is for our veterans, and the VA loan will outcompete a conventional loan program in just about every way. The interest rates are typically better. The cost for veterans is lower. And there used to be a stigma with VA appraisals being slower or longer, but that's really not the case anymore. So the VA loan is really a good loan. Um, Clients who have lower credit scores or maybe just need a lower down payment option can use an FHA loan. Um, the mortgage insurance is probably kind of the worst trait of an FHA loan, because it does have a upfront mortgage insurance and also monthly mortgage insurance. So typically we use an FHA loan to get people into the house, but as soon as we can, we try to refinance into a conventional loan just to avoid that mortgage insurance that is so high on an FHA loan. But an FHA loan is a good loan. And then another zero down payment option with lower interest rates for our home buyers in rural communities is the USDA loan. So I'm going to talk a little bit more about the USDA loan right now. This loan program was created primarily to provide growth opportunities and stable financing for rural communities. This program offers more affordable financing solutions for home buyers that if you don't have the assets, because a lot of people talk down payment, but there's down payment and there's closing costs as well. So when I talk to clients, I'm like, how much money do you have saved? And they say, 10,000, 15,000, 20,000. Well, you can't put all of that towards the down payment. You have to have down payment and closing costs. But both the VA loan and the USDA loan are zero down payment loans. But like I said, you still have to have closing costs. And then there's times when you can do seller concessions to get sellers to help with closing costs. But in this market that we're in right now, it is a seller's market. So you're not seeing many sellers that are going to contribute to closing costs. So you do need to make sure that you have some closing costs saved. But the mortgage insurance for a USDA loan is a little bit better than a conventional loan in the FHA. And the interest rates on USDA loans are very competitive, and they'll often beat a conventional loan interest rate. Now, there are some limits on the USDA loan. First of all, the community has to the county has to qualify. So, for instance, for those of you who are here in Central Texas, I know like offhand, like Guadalupe County is a county that is rural enough that would qualify for USDA loan. But it's not just the county size, it's also There are also income restrictions. So the USDA loan is designed for a lower income buyer. So there is an income limit. It is different for every single county. So there is a lookup tool that you can use on the USDA website to see if a property qualifies for a USDA loan and to see if a client's income would qualify. But basically, the home buyer and like all the adults that will live in the property that receive income, all of that income is added together and it cannot exceed 115% of the area's median income. Um, the minimum qualifying credit score for a USDA loan is 640. And you can't have any delinquent like federal debt, no new collections within the most recent 12 months. The home buyer needs to be a US citizen or a legal non-resident alien. And like I said before, if it benefits our rural communities, so the population can't exceed, I think it's like 35,000 for the area, the subject area of the property. USDA loans can only be used for primary residence and can be non-income producing. So if it's like a working farm that is producing income, that can't technically fall under a USDA loan. And so there's other kind of just stipulations with the USDA loan, like it can't have an in-ground swimming pool. It has to be a modest size for the area. There can be exceptions to this depending on the family size of the subject property. But USDA really is a great loan option if you're in a rural area and if you meet those income restrictions. Okay, so now let's talk about the FHA loan. So, if a client can qualify for a conventional loan, I would typically choose a conventional loan over the FHA loan. But like I said before, you have to put for an FHA loan, it's a minimum of a 3.5% down payment. You can use an FHA loan to purchase a multi-unit property, such as a duplex, a triplex, or a fourplex, as long as you're living in one of the units, and then you can rent out the other units. So that's a really cool thing about an FHA loan. This is an excellent program to get clients into a home sooner rather than later. It can give you the ability to with an FHA loan, you can purchase just a primary residence. There's also a renovation loan through FHA known as the 203K. So that's like if the property needs some work, needs some renovations, you can purchase using an FHA 203K, and they'll loan you money for those renovations. So that's a really cool thing about option for FHA. And within that 203K program, there are different varieties of that program that will depend basically on the extent of the repairs that are needed for the home. There are no income limits for the FHA loan, but there are county loan limits. So depending on what county you're in, you can just kind of Google it. There's a website linked on this screen here that you can go to, but really you could just kind of Google like, what are the FHA loan limits for whatever county? And so that would be the maximum loan amount that you could take out for the county using an FHA loan. So even though there aren't any income limits, you still have to prove that the client has to be good credit worthy, have a decent credit score. And I have lenders that'll do FHA loans for a credit score as low as 550. And you could still possibly qualify for an FHA loan. But there has to be sometimes some letters of explanation for why your credit score would be 550. And so FHA is a lot more forgiving of credit issues and credit history than conventional. So it really is a good program to like get you into the home. But like I said, really, we use that program to get you into the loan and get you into the home and then probably want to refinance out of it, really to get out of that mortgage insurance, because the FHA mortgage insurance doesn't go away. It's for the whole life of the loan, unless you can put down, I think, 10%. FHA also allows higher debt to income limits, and it can only be used for primary residences. Like I said, you could use it for multi-unit property as long as you're living in one of the units, and the terms are either 15 or 30 years. Can also be used for manufactured housing. Okay, let's talk about the VA loan now. Of course, the VA loan is an amazing program for our veterans. This program was established by the U.S. Department of Veterans Affairs. It allows veterans, service members, and in some cases, surviving spouses, to purchase a home with no down payment. Again, you still have to pay closing costs, but you can do no down payment or very little money down. This loan can be used to purchase, renovate, repair, refinance a primary residence. Unfortunately, in the state of Texas, you cannot do a cash out refinance, where you get cash back from like the equity of your home, but it still is a great loan program to do zero down for your purchases. There's no mortgage insurance for the VA loan, which is amazing. There's no prepayment penalties. It has very competitive interest rates. Typically, the interest rates on a VA loan will be better than a conventional loan every time. And then to help mitigate the cost of a home loan purchase, like the closing costs are pretty limited, and the seller does have to pay for a few of the closing costs, such as the commission for the real estate professionals, the brokerage fee, a buyer broker fee, and then a termite report. As for the VA appraisal, like I said earlier, there used to be kind of a stigma that VA appraisals took a long time, but they really don't anymore. VA appraisals are taking just as long as a conventional appraisal. So I had a recent example where a realtor discouraged a veteran from using a VA loan, and I think that's absolutely not the case. If you are a veteran, your client's a veteran, the VA loan is really probably one of your absolute best options. Um, so the appraisal for the VA loan does want to make sure that the property is safe, structurally sound, free of health hazards. There are some minimum property requirements, such as it has to be a residential property, must have adequate living space, the mechanical systems must be usable, heating must be adequate, must have water availability. I mean, basement and crawl spaces must be issue free. And the property must just have safe access, no health and safety hazards, no defective construction, and no termites or lead-based paint. So depending on the local market condition, a VA appraisal will usually take about 2 to 3 weeks, just like any other appraisal. For a client to get pre-approved for a VA loan, basically you just need to talk to your loan officer. You'll need the COE, which is your certificate of eligibility, DD-214, which is your discharge paperwork, and if you're retired, and then any leave and earnings, like if you have disability income, anything like that, from your service time. So those are the main loan programs, right? Conventional, FHA, VA, USDA. Those are the ones that are typically used the most often. But now I want to talk about some of the more specialty programs that I have access to. And these will range from self-employed loans for self-employed buyers, construction loans, land loans, jumbo loans, down payment assistance. So I'm going to talk a little bit about some of these specialty programs. Now, here's the thing about these specialty programs. They are designed to help people get into the home. Typically, they're going to require possibly a bigger down payment. They might have higher credit score requirements, or higher interest rates. So you're not going to get these specialty loan programs at the same rate and pricing that you are your more typical conventional VA, USDA, FHA loans. Okay. So, your client has to have that mindset, to go in going into these knowing that, you're not going to get the best interest rate out there. But it is a way to get you into these properties. And, I talk about interest rates in this rising rate environment. If you're renting, what's the interest rate on rent? Well, 100%. You're paying 100% interest on rent because you're not getting anything from that investment. You're not building your wealth, right? So anytime you can get into a home, even if it's at a slightly higher interest rate, but you're investing in something that can build wealth, then it's a much better deal than throwing your money away on rent. So anybody, you would look into some of these specialty programs if traditional financing doesn't work for you. And like I said, they're going to come at a higher cost. The minimum down payment is usually between 10 to 30%. To get those 10% down payments on some of these specialty programs, you have to have much better credit score. The interest rate is normally 1 to 1.5% higher than a conventional loan, and maybe even a little bit more than that, depending on credit scores. These loan types are for investors, self-employed, jumbo loans. You want to probably have a lot of assets and some steady income, but I have some that are, even if you don't have steady income, we can get you into a loan. So for self-employed borrowers, business owners, we have bank statement loans. So if you haven't done your taxes yet, or you write off a whole lot on your taxes and your actual income is really higher than what your tax returns show, because in order to qualify for a conventional loan as a self-employed borrower, we're going to look at your tax returns, and typically 2 years of tax returns, and more specifically, like line 31 of the Schedule C. And so if you write off a whole bunch on your taxes, then you're not going to qualify for as much house as you really want. So we have these different programs. We can use your 1099s. We can use your profit and loss statements. We can use your bank statements, where it just is going to show the income deposits that you make into your bank statements. And we use that to qualify you for the loan. So those are really great programs for self-employed borrowers. The close time for these is usually 25 to 30 days. And in this area, realtors know this, especially appraisals are taking a little bit longer. So sometimes we might even need 45 days to close, just because of the time it takes to get the appraisal. But these bank statement loans can be used on primary residences, secondary residences, and in investment properties. Now, I even have, this is crazy, I even have a no ratio loan, which basically, if you have a big enough down payment and a good enough credit score, and you have to have some closing costs, I have a loan program that doesn't even look at your income at all. It just looks at your assets. And as long as you have enough assets and some reserves, then you're going to qualify for the loan when you have good credit. So again, these are all going to be higher interest rate, higher down payments, but maybe your employment hasn't been stable. Maybe you don't have a 2-year history, because a lot of times with these self-employed borrowers and these bank statement programs, you still have to have a 2-year history of self-employment. So really, I've got some really cool niche products for different scenarios like that, if you don't qualify for the traditional loan products. Now let's talk about some of the investor loan programs that I have. These programs are really, they're designed for investors. Now you can get a conventional loan as a real estate investor. You can get up to 10 conventional loans as a real estate investor. So maybe you've already maxed out on your conventional loans and you can't take out another conventional loan. So you want to do one of these other investor loan products. Or maybe your income doesn't allow you to qualify with the debt to income ratio requirements that we do for conventional loans. So we have what's called a DSCR. So that's debt service coverage ratio loan. And basically, if you have decent credit, if you have enough money for the down payment, Um, we would do a rental appraisal. So basically, we'd run the appraiser would run the comps, the rental comps, and as long as the rental income, the proposed rental income, would cover the mortgage, then the property qualifies. And we don't need the borrower's income statements. We don't need the borrower's, tax returns, W-2s. We don't need any of that because the property would qualify with the rental income, the proposed rental income from that property. So that's a pretty cool product for anybody who is wanting to invest in some rental properties, short-term rentals, long-term rentals. It's a really cool program specifically designed for investment properties. Okay, so I also have some construction, renovation, and land loan programs. I'm going to talk about land loans first. If anybody out there has tried to buy land, land loans are hard to come by. They're not. There's not a whole bunch of lenders that are jumping at opportunities to lend for land. So the terms on a land loan, I only have one lender that'll do a land loan. And so these programs require a higher down payment. My particular lender requires a 35% down payment. And I think a minimum loan amount of 100,000. So I think the minimum purchase price for the land that I can do is about 154,000. But I do have a land loan option so that if you are looking to purchase land. Let's see. I also have construction. I have a really cool one-time close construction loan. So what that means, typically, if you're going to build, do like a custom build on a house, you have to buy the land. So there's your land loan. And then maybe you take out a construction loan to build, and then you refinance into your permanent 30-year loan. Well, if you're doing it that way, you're paying closing costs for the land, closing costs for the construction, closing costs to refinance into the long term. So that's a typical way that a lot of people do it. But I actually have this awesome one-time close program where you can roll the land, the construction, and the permanent financing all into one loan. And I can do this with conventional, FHA, VA, and USDA. So it's a really cool program that's going to save you having multiple closing costs. If you are thinking about building a house, it's a really great thing because it gets you locked into today's interest rates for that permanent financing. Whereas if you're doing a construction loan, you wait till the end of the construction and then you qualify and you have to qualify for the permanent loan. Well, if you're just now starting to build and it's going to take 6-8 months to build your house, well, what are interest rates going to be in 6 to 8 months? We don't know. Chances are they're going to be a lot higher than they are right now. So by doing this one-time close program, you can, lock in that interest rate. On the FHA, VA, and USDA, you don't even have to make your payments while the house is being built. You don't start making your payments until you move in. I think conventional, you would have to make interest-only payments while the house is being built. But it's a really cool program if you are buying land or if you already own land and you just want to build on it. Again, I also have some renovation loan products if you want to do some different home renovations. So some really, really cool things there. The next thing I want to talk about is let's talk about the jumbo loan. So the jumbo loan, essentially these are loans. Every county, or there's county loan limits. I'm sorry, there are conforming loan limits for conventional loans. Typically, the conventional conforming limit is $647,200. That's the new conventional conforming loan limit. So if you are borrowing more than $647,200, that's when we get into a jumbo loan. And so every county has different loan limits. There are some high cost areas that might have a higher conforming loan limit than the 647 that I just mentioned. But basically, jumbo loans have a different set of requirements from conventional financing. For instance, you'll have a required minimum down payment of 10 to 25%. I actually do have one lender that'll allow you to do 3.5% for a jumbo loan. But again, remember, it's always a trade-off. If you're going to have a lower down payment, you're probably going to have a higher interest rate. But typically for a jumbo loan, you need to come up with at least 10% down payment, but 10 to 25% is typical. Interest rates are going to be slightly higher than a conventional loan. Jumbo loans also require 2 appraisals depending on the size of the loan amount and the lender. And they are typically for primary, secondary, or investment properties. I have several different lenders that do jumbo loans, so all of them have slightly different criteria. But if you are in that higher price point, you want to know about the different things with jumbo loans. The one thing is they don't typically have mortgage insurance, but you do have some reserve requirements. The lender does want to know that you have the assets in reserve to make sure that you can make your payments. Okay, and the last thing I want to talk about are my down payment assistance programs. So down payment assistance programs come either in the form of a second lien or a grant. So basically, a second lien is when you basically take a second mortgage that just for the down payment. They might have an interest rate, they might not. The terms for that second lien could be anywhere from 3 to 5 to 10 years. And then with the second lien, there may be requirements that like you can't refinance out of the loan for the duration of the second lien. But really, it's a cool program. If you don't have a lot of money saved for down payment, then we have these down payment assistance programs. Again, you're typically trading off with down payment assistance, you're trading it off for a higher interest rate. So expect that if you are using a down payment assistance program, you are going to get a slightly higher interest rate, which means that your monthly payments are going to be a little bit higher as well. Now, the grant program, so there's also a grant program for down payment assistance. It's basically a gift that doesn't have an interest rate. But like I just said, the interest rate on your primary mortgage is going to be a little bit higher. There's typically no time frame to refinance out of these loans, but they can be the down payment assistance programs can be sourced from one of my lenders or from a nonprofit housing corporation. So we have different ways to get some down payment assistance. And so as a brokerage, I have access to a bunch of different lenders and also a few different down payment assistance programs to help buyers get into the homes. Typically, the minimum credit score for down payment assistance is 620. But if you can have the higher your credit score, the better you're going to get in the terms and the interest rates, whether it's a grant or a second lien. So that's a quick and brief overview of like all the different loan programs that my brokerage has access to. Just to talk a little bit about me as a loan officer and what you want to look for in your loan officer. Everybody's situation is different. Every client is different. Every scenario is different. And that's what like the loan officer, like my job is to listen to my clients, ask important questions, understand what my client's goals are. And, I'm going to research the products for my client. There's a lot of creative things that we can do to help you get into the home. And so it's really important that I understand my client's needs so that I can lead you to the best product that's going to meet your needs and hopefully at the best rates, best terms. So just make sure that when you are shopping for your loan officer, and I'd love to help you out, please call me if you are interested in getting pre-approved. Realtors, I'd love to help your clients with any of these programs that might meet their needs. Let me put my contact information up here. Hold on. There's my contact info. You can call me at 210-279-4392. Email me at ericabelay@bestlifemortgage.com, or just shoot me a direct message, or leave a comment in the chat below. But my brokerage is called Best Life Mortgage. I chose this brokerage because I believe in our mission. We want to help everybody lead their best life, achieve their best life. So I want to provide first-class experience for my clients, for my realtor partners, for all of my referral partners. We adopt a growth mindset in our company. I've grown a lot since I've joined this company, but we just want to help everybody become the best version of themselves. And then I'm really proud to say that my company gives 10% of our corporate profits to liberate kids from the shackles of human trafficking. So we partner with a company called Destiny Rescue that does a lot of like covert missions to rescue kids from these horrible situations, and does counseling and rehabilitation programs to help lead these victims to on their path to achieve their best life. So if I can help you or realtors, like if I can help your clients in any way, I would love to be able to do that. So please don't hesitate to reach out. Thank you so much. I hope you tune in on Thursday for First Time Homebuyer 101. This recording will be available on LinkedIn. It's on Facebook, and also on my YouTube channel. So have a good evening. Take care.